You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean but one thing. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options, the program where we do it all. We break down all the action going on in the world of futures options. What's going to make it on the show this week? Rates, metals, ags, equities, who knows? You got to tune in every week to find out. My name is Mark Longo from theoptionsinsider.com. Reminding you, of course, if you like what you hear and you're on the on-demand side, as we know many of you are, all we ask is that you keep rating and reviewing. Coming off the hottest month in the history of the network. We've been doing this for some time, too, 15 years. So that's a lot of people. So we like to see all the new ear holes joining us here on the network every month. We want to keep that trend going. So if you like what you hear, you could argue these new reviews more important than ever. Wherever you're getting the show, keep rating and reviewing so the new folks, and they are legion, can continue to discover the content. Of course, if you want more in your life, you want more than the couple of shows we're hitting you with a day on the on-demand side, you want to go above and beyond, join us for a great pro Q&A session every Tuesday, Options Oddities on Fridays, giveaways throughout the week, live sessions on every show you could possibly imagine, and a whole bunch more. Theoptionsinsider.com/pro is the place to go to begin that journey to the dark side. Let's see who's joining us for today's journey. Holding down the CME Group and FTSE Russell hot seat, I'm pleased to say our old friend, Mr. Russell Rhoads, a man who has moonlighted as the actual host of this show on occasion, holding down the fort over there at the Kelley School of Business when he's not traveling the globe for EQ derivatives. Mr. Rhoads, welcome back to the CME and FTSE Russell hot seat, sir.
I was your Joan Rivers once on this show, but the more I think about it, I think I want to be like Richard Belcher or somebody like that. Somebody really obscure that would step in on the Tonight Show every once in a while. But also somebody that looks really cool.
He could be like Robin Williams, too. He was a frequent guest, but he never really did the hosting thing, but he was always kind of on the show. So Robin Williams maybe, too, one of those ones. We're kind of going back a ways. All the millennial and Gen Z listeners are like, Johnny Carson? What the hell are you talking about?
Can I deviate just a bit when you brought up Robin Williams?
Have at it, sir.
His brother, who looks a lot like him, was my cross-country coach and my physics teacher in high school.
Really? So he
looks just like him, except he's bald.
So he was the real professor who created Flubber and all that stuff.
Exactly. Maybe he was a consultant on a couple of those movies. So
I didn't even know he had a brother.
Super guy, too.
Interesting. Weirdly small world. Bonnie Hunt's brother was my doctor for a long time. Really? So yes, weird world. He's a doctor. He's an internist here in Chicago. So weird world, how the brothers and sisters of celebrities infiltrate into our daily lives. As we keep rolling into the world of futures options, it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show we break down everything lighting it up this week over there at CME Group, to the light side, a.k.a. the upside, and to the dark side. And listeners, I will give you a hint. A little bit dark side bias this week. Looks like roughly 2/3 in the red and about 1/3 in the green. If you want to see this report for yourselves, follow us at Options. Follow the folks at CME over there at CME Group. We both tweeted out right before showtime. And of course, if you want to get access to all the great tools, the pro level tools where you can generate this stuff and a whole bunch more, head on over to bantix.com, BANTIX.com. If you like these markets and you listen into a show like this, you probably do, you would be well served to have all this information at your fingertips when you're actually trading them. And Mr. Rhoads, as our guest this week, where should we begin our journey, to the light side or to the dark side, sir?
Let's get the light side out of the way. Let's get the light side.
Get those pesky Jedi out of the way. We want to go all dark side, all Sith. All right, to the light side we go. Let's get in there. Let's go. To the light side we go. Number 5, 3.5%, almost 3.6% to the upside this week is soybean meal, 3.59% to be precise. Number 4, our old friend WTI. So we go from ags back to energy, 2 frequent offenders of late. A lot of that driven by what's going on over there in the old Ukraine. 4.37% to the light side this week for WTI. Hanging out still in energy for number 3, it's Brent, up 5.15%. Number 2, also still in energy with heating oil, up 5.86%. It was number 4 in the same direction last week, up 4.47%. Again, before you get excited, under 1,000 contracts on the tape on the heating oil Brent. Similar level out there. Then number 1 to the upside this week, we've got corn up 6.74%. So a pretty decent week for corn, all things considered. So to the light side, we have a smattering of energy and ags. Let's see what we've got now to the dark side. Number 5 to the dark side. Back to the ags again, even though we're going into the livestock category. Our old friend Lean Hogs, number 5, off 3.38%. A lot of you enjoyed that episode we did a few weeks ago with the calendar butterflies in some of the livestock names and others. A different approach to trading those markets. So I'm glad to see a lot of you enjoyed that. I know Rich enjoyed it too. I'll have to get him back on the show. Number 4, copper, off 3.46%. It was number 2 in the other direction last week, up 6.16%. Copper actually doing some decent numbers. Again, it's no Eurodollars, but compared to where it was when we first started doing this show, it's doing a lot more paper. It's around 8,000 plus contracts a week. So something we could maybe potentially sink our teeth into. Number 3, it's lumber. Again, one of our 3 frequent offenders, lumber, off 4.86%. It was number 1 in this direction last week, off 9.43%. Again, before you get excited, last week was a busy week and they did 34 contracts in lumber. So probably not hanging our hat out there. Number 2, palladium, off 5.52%. So to the metals we go now again. And then number 1, platinum, off 8.23%. So a lot of stuff going on. Interestingly enough, our 3 frequent offenders, it's Bitcoin, nat gas, and lumber. Only one of them making an appearance this week, which is kind of surprising. So Mr. Dr. Vix, Mr. Once and Future Dr. Vix, Our way is wide open in front of us. We have a lot of metals, we have a lot of ags, and we have a lot of energy lighting up our movers and shakers. So we could start with one of those, or we could go in a completely different direction. What is floating your boat? Where should we begin our journey this week, sir?
Oh, let's take a look at the ags real quick. And then just so you know, to cue things, I'll probably say energy right after that.
All right. Ags, it is.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody. Welcome to the ags segment. You guys know where to go to generate all these reports for yourselves completely for free because we like you. CMEgroup.com/TWIFO, TWIFO is the place to go to begin your journey. Then get into that drop down there. Obviously, ag is going to be top of the asset class, so pretty easy to find. And then we're going to swing over into grains and oil seeds. And Mr. Rhoads, because you and I are simpatico now because you've hosted the show before, I already knew before you even suggested, I already had pulled up corn, sir. That just shows
exactly where I am.
We're on the same wavelength. What's catching your eye in corn this week, sir?
Oh, just goodness gracious! I was looking out at in is July, looking at the third line down where you've got about 42,000 of the volume is much higher than pretty much anywhere else. I'm just kind of curious as to why they would be targeting that time frame more than anything else. And it looks like we got a nice mix of calls and puts in the front months, and then calls as you go farther out. But the first thing that drew my eye with all of these numbers was that the 624 expiration. We've got a lot of call volume, but you've got put skew, which is pretty high. So I'm trying to resolve that in my mind.
Let's see if we can all resolve it together. Corn, of course, our number one mover to the light side this week. Listeners, up 6.74%. Where is corn trading right now, you might ask? 772 and a quarter. It's up 6.25% just since Monday's session. So if you go all the way back to last week's show, obviously up about 0.5% more, but obviously a lot of that move coming in this week. And how much paper is on the tape this week in corn? It's right around the level you'd expect, right around 400,000. So not blowing the doors off, but not nothing either. It's kind of an average volume week for corn. And in terms of the action, Mr. Rhoads kind of just laid it out for us. 35.6% of that roughly 400,000 contracts coming in the July contract. That has about 15 days to go, which is perfect. That's right at our frame of reference. We like to go 2 weeks out and beyond. No more of this one-day crazy equity going out tomorrow kind of nonsense. So corn, we're going out to July. What is the vol in July corn? You may be asking. Right around 29.75, up about 1.5. So close to a 30 for corn vol. Actually, a little bit frothier than a lot of our equities out there. Not so much on the actually small cap, still hanging out about a 30. So it's about similar vol level to small caps, more than a large cap though, like a VIX. So corn frothy, we've often recommended corn. If you're going to dip your toes into the ag space, corn is a great starting point because it does enough paper. It has a decent amount of flow. It has a decent amount of liquidity across the months. You can get in and out of stuff without having to worry about what's going on here from an overall volume perspective. And a lot to parse, especially with this report. I can see Mr. Rhoads wondering about a question a lot of you have asked as well, which is the shift slide column. You'll see this, listeners, if you go on over there to the report. That's an element that Nick and his team added because we always talk about skew, listeners. And that breaks down, the top number is how much the skew curve itself actually shifted versus how much you actually slid along the curve. It's a very confusing thing. I know. That's why there actually are some videos over there at bantix.com to help explain it. And if you click on it, if you have the pro access to the tools, it gives you a little bit more of insight into what that is. It's another great tool that I don't really see anywhere else in analytics platforms to help you understand more about what you're seeing. Because let's look right now. Let's look out to July. The skew. Last week, the puts 2.7% cheap. This week, 2.4% cheap. So the puts kind of hanging out at about the same level. The calls last week, the calls came in catastrophically. The calls, 4.5% bid. So that's a 4.5% premium over the already nearly 30% at the money vol. This week, 0.9%. So they've come in over 3 points. So a lot less interest in the calls this week. And that shift slide mechanic, Mr. Rhoads, shows us that we're actually sliding a lot along that skew curve, 1.34 versus only a 0.18 shift. So that means we are kind of following the trajectory that the skew has laid out versus some big seismic shock that really changes the skew up a little bit. Does that make sense, Mr. Rhoads?
It does. It does. And I was a gentleman. I just and asked on the chat, so just in case. But I had just not noticed it before.
No, yeah, a lot of people have questions about that one. I do believe it might even be on YouTube on Nick or Quick Strike's thing. They have an explainer. So a lot of people have questions. We get those regularly. That's why I wanted to chat about it on the show a little bit, because there are a lot of columns here. You may not understand what all of them mean, listeners. So yeah, that's a good one to ask. But you're with me probably. You don't see that in a lot of analytics packages, which kind of makes it interesting.
I don't.
You always speculate how much are we going to follow the skew curve versus how much does it actually do it, right? And this is a good way to kind of break that down. That's why I'm excited that the Quick Strike folks are kind of working with the MyAx folks now to help bring some of this to equities, because I know this will help a lot of people out there who are slinging their Teslas and all their mad, AMCs without any real knowledge of what's going on from a skew perspective. Some of this could really, I think, help those folks out there, Mr. Rhoads. But we're talking corn before we get off field into Tesla and all that fun stuff. Corn out here in July, it was the 800s. Listeners, the 800 calls that were leading the dance. Actually, it was 800 calls pretty much across the board that were very active. In July, 15,000 of them traded. But let's go out actually a little bit further first, because 800s also traded in December, a little bit more actually, 17,647 to be precise. And the big day today, 6,700 going up today, 6,000 and change on Tuesday, almost 4,000 yesterday, and 1,300 on Monday. Opening all week long. So a lot of opening action on the 800s in December. What did we see this week as well on the 800s in July? A little bit more back and forth paper on the 800s in July. Still today, the big day, 6,800 going up today, 4,600 on Tuesday, 2,600 on Wednesday, 1,400 on Monday. Kind of back and forth opening to closing. So a little bit more back and forth paper in the Julys versus the Ds. That makes more sense. Obviously, more time in December. You might want to be leaning towards opening more there if you are bullish on some of that upside paper, or maybe if you want to just fade that 800 strike. So action on the 800s kind of across the board. 800s also trading in the week 3 Junes and a bunch of other contracts here. 800, kind of the strike du jour out here right now, which again, Mr. Rhoads, if we're seeing a lot of opening paper on the 800 calls in corn, obviously, we don't know all the sides. It could be overriding a lot of that, but it doesn't bode well in the near term that we're going to see a lot of perhaps cessation of upside in corn in the near future, sir.
Well, it's interesting now that I've been in your seat going through this, and it is more difficult what you do than what I am doing right now. While you talk, I get to poke around at the numbers and have a little insight, which is easy to do when you're not talking at the same time. I think that July line where you see the 15,000, almost 500, 800 strike calls trade, the fact that when you look at the skew and the call skew's 1.8 makes me think they got to be net sellers there.
They're probably taking those off.
When you go down to the other 800s, it looks like they were buyers out in September. Definitely in September. Maybe not in August, but in September. And then where were those 800s in December that you talked about? I would assume they were net buyers there as well. So maybe a calm summer, and then we're going to rock and roll in the winter.
Yeah, it seems like some folks maybe keeping that party alive a little bit, maybe July, a little bit too close to home. So they're taking those off here and rolling them out to pick your poison. Probably December, but also other months have 800 calls active as well. So it seems like some folks are still probably wagering on the 800 strikes going to be where the action is, just maybe not by July. Hence why they're keeping the party alive. We like to call that trade on some of our unusual activity shows. Anything else lighting up your tape in the ag, sir, or do you want to pick another complex?
What time is it? Let's go ahead and go to another complex. I mean, we could do beans, but I'll bet you it looks kind of the same.
I think I can hear the crowd. I can hear the audience whispering. They want to hit a little bit of energy. So let's go there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the world of energy. You're going to pop out of that AGS asset class, scroll down 3 notches to energy, go over to the product family. I think we're going to kick things off in crude oil because A, nat gas, not in our movers and shakers this week, and B, we've been talking a lot of nat gas lately and not as much on WTI, but WTI actually lighting up our movers and shakers this week. So, Mr. Rhoads, what is catching your eye out there in the world of energy this week?
Well, I'm trying to get into that WTI and see what happened, action-wise in conjunction with our cost of gas continuing to move up.
I'll tell you what, while you're getting your technology working, I will do a quick rundown for you here. WTI, of course, listeners, in that energy drop down, we just broke it down. How much paper on the tape this week? 446,000 contracts. So that's a pretty decent amount of paper. WTI, kind of like some of the other products we look at, tends to hang out around the 400,000 level in any given week. So 446, that's a decent bit of paper out there. Where is WTI right now? 121 and almost a half. Man, we were just talking about 120 strike not too long ago. It seemed like it was perhaps going to be a bit of a bridge too far. And now here we are north of that. Again, looking at this futures curve, heavily backward out here in the WTI. The front future, 121.46. Then we go out to July a little bit more. It's 119. And then we go out a little bit farther to October, November. That time frame, we're down to 111 to 113. So heavily backward curve, of course, means the front portion of the futures, listeners, more expensive than the longer dated contract. Speaking of longer dated, the lion's share of the action this week, 33% going up in that July contract that has a whopping 7 days to go. So I don't know if we're going to be spending too much time out there. We shall see. I think we're going to spend more of our time out here in the August contract that has a nice 36 days to go. And that did about 19 almost percent of the paper this week as well. So action out there as well. By the way, you might be wondering how much vol is there in WTI? In that July contract that has 7 days to go, that's about a 36.5, off about 6.5 points. If we go out a little bit farther, though, to August, then we're talking about a 45. That's down about 2.25 points. So again, getting a little bit frothier the longer you go out. Of course, it's hard to really talk about vol with only 6-7 days to go anyway. It's more gamma at that point. In terms of skew, let's see. Out here in the the August contract, the puts were 0.7%. So pretty much in line with the at the money, which is close to a 45 right now. This week, they're 1.3% bid. Last week, the calls, 3.1% rich. And this week, 0.6. So the calls have come in to be kind of in line with the at the money as well, which again makes sense. We're hovering at around 120, close to it. You got to be extremely bullish to want to load up on the continued upside at these levels. Not saying it can't happen. It's just we are already hanging out at some pretty rarefied air in the WTI landscape. In terms of what was trading, though, it was the July 125s. That's where the lion's share of the oxygen was this week, listeners. Nearly 19,000 contracts on the tape. The big day was Wednesday, 10,000 going up there, 6,300 on Tuesday, 1,800 on Monday. Not too much today, only about 600 today. It looks like it was primarily closing all week long. So some folks maybe getting while the getting was good, taking their profits off the 125 strike, or deciding that was a bit of a bridge too far and abandoning it. Either way, closing out a lot of paper out here on the 125 strike this week. Probably why the calls swung from about unch to about 1% cheap. Folks dumping them to get rid of those. Then we also have, we have the 130 calls. So 125's not rich enough for your blood. 130 calls doing 11,000 contracts this week. The big day for those also Wednesday, 7,300 on Wednesday, 2,200 on Monday, 1,300 on Tuesday. Again, today, kind of a light day for WTI. Not a lot of paper going up. And again, for both of these, for all these strikes here, 130 is also pretty much closing all week long. Let's scroll a little bit farther down, see if we can see any other weird or interesting paper. 120 is pretty active in August. They did about 7,000 contracts this week. Let's see, 160s going up 2,400 times in October. Let's just dig into that really quickly. That's probably a vertical. No, it looks like that's straight up 160s trading 1,400 times on Monday. All of that opening. Wow. I don't see any other real legs. Maybe it was a 110, 160, but it doesn't line up well. So, wow. Wow. 160s opening. There we go, listeners. That's where we're trading right now. Let's go a little bit farther out. 150s also trading in June of next year, 3,600 times. And those were active all week long. I think this is what I was talking about with Dan Gramza last week. It was this 150, 200. Someone's got an axe to grind on this thing because they were trading it again this week. 1,100 times on Monday, 100 times on Tuesday. They put it up 100 times just for fun on Tuesday. And then 1,226 times on Wednesday and 1,100 times again today. So somebody loves this 150, 200 vertical. They continue opening on both sides of it here this is in June of next year. Mr. Rhoads, hopefully your technology has come back online now. What's catching your eye out there in WTI this week? And also, what do you think of this 150, 200 vertical that someone really seems obsessed with, sir?
Are they selling the 150s or buying them?
That's the one problem. We get this question a lot with futures options. And the one issue still with the execution on the futures options side is we don't have the degree of specificity that we have in, let's say, an equity option where we could see instantly exactly where it went up on the execution, somewhere between the bid ask, which will give us a little bit more of a hint. It looks like they were opening all week long. And let's see, skew-wise, where are we here?
Yeah, I think it's if they're selling the 150s, I can't go an hour in my life without mentioning VIX once. But you know how we'll see way out of the money, 130, 140 strike VIX calls trade. And that's almost always somebody that for margin purposes, maybe buying a way out of the money call, but very doubtful that somebody really expects. Gosh, I hope oil is not at 200 by next June. Eventually it's going to be too expensive for me it's not going to make economic sense for me to drive back and forth to Indiana anymore.
Back to the Zoom teaching. Zoom professor, Mr. Rhoads.
Yeah, as much as possible. So that's and then the other thing that as you were working your way down, I always like to look at the call versus the put skew and just see if there's any definitive switch, where all of a sudden it looks like the calls are, there's more bullish than bearish activity. It looks like we kind of even out with that 160 call that you were talking about in October of this year. And then it looks like, maybe everybody expects a Republican sweep and we're going to just destroy America and get as much oil out there to everybody as quickly as possible.
While you were talking, I was trying to scroll. If you have access to the premium tools, listeners, you can go through the block trades report. And that's what I was just trying to do now to see if I can get more insight into what was going up exactly. I don't want the futures. I just want the options. There we go. That'll make my life a little bit easier. Let's see if we could find these 150s in crude oil and the 200s really quickly before we head on in, because I am intrigued now as well. I blame Mr. Rhoads for getting me down this rabbit hole. Let's go out to 250. Someone did a 200 lot of the 250s. Well, listen, as you can see, obviously this is a rabbit hole we could go down for some time, which is why we don't always break down all the executions here on, here we go, 100 lot of the spread. Looks like they bought the 150s, Mr. Rhoads, and sold the 200. So kind of the initial way we saw it, sir. So they bought that vertical. Wow. Well, cheap way to benefit from World War III. Maybe they're like you. They're driving to Indiana on a daily basis, and they want to have a little bit of a hedge in their back pocket, sir. Well, maybe I need to do that, too. I need to hedge myself. I've said this before. We all are inherently, at the end of the day, short crude, right? So we all should have some sort of hedge on all the time, because either way we win. Because if a crude gets up there, your hedge wins, but society loses. So it's going to cost you money in the long run anyway. So we all should probably have something in our back pocket to hedge against what has unfortunately already come to pass, which is extraordinarily high energy prices. All right. Speaking of extraordinarily high, equities not quite there anymore. Let's get into that. A little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the world of equities. You're going to go into that drop down. You're going to pop out of energy. You're going to go one below it to equity indices. We're going to kick things off in the Russell 2000. It is hot times in Russell 2000 right now, listeners, with, of course, the Russell Recon Those folks have been busy. We want to get them back on pretty soon to talk about all things recon, all things small caps. So we will be doing that coming up on the show in the coming weeks. But Mr. Rhoads, I know you're not chatting to me about all things commodities and commodity volatility. You spend your days nose to the grindstone in the world of equity volatility. What is catching your eye out there this week, sir?
Just the continued premium of the continued wide premium of the secondary volatility indexes relative to VIX. Which leads me to believe that nobody's jumping into riskier stocks right now. If they're putting money to work, they're putting money to work in old school Warren Buffett S&P 500 stocks. And I got the question earlier this week on an event that I was doing, about when do I think we're going to see the all clear for tech stocks, and I added small caps to that, and I said as soon as we see that spread narrow down to maybe more historically normal levels, especially with the NASDAQ related one, but also with the FTSE Russell related one.
Let's talk about some of those normal levels. Let's set the table from a vol perspective right now, listeners. Coming into the start of the show, RVX was flirting with 40 not too long ago, but it has been hanging out in the 30 handle, kind of refusing to break it for a while. That remains the case again this week. RVX, of course, the VIX of the Russell 2000, right around 30 and a quarter when we kicked off the show, down 1.4, almost 1.5 points from where it was this time last week. VIX cash at about a 24.60. So it's looking light, but still kind of staying frothy, still kind of bouncing around in this kind of mid-20s range. We've been hanging out for a little bit now. That puts it down 2.64 points on the week from our show last week. VVIX, so the vol of vol, this is an interesting area. We've been talking about it for a while. 89 and a quarter, down almost 6 points, 5.7 points from where it was this time last week. If you've been listening to this show or indeed volatility views, you know that that's a fairly important level to keep an eye on. VVIX, aka the volatility of volatility, has not broken the 100 handle very often since the start of the pandemic. In fact, it's really only happened a couple of times. September of 2020, I believe. And then the last time until now was back in April of last year. So you had to go back over a year to find a similar level to where we are now. And we didn't get close to the 80 handle. We got into the mid 90s and then bounced off it very quickly both times. So it was a brief flirtation with a sub triple digit vol of vol. These days, we're below it. And we've been hanging out in the 90s, actually now into the 80s for a few weeks now. So that's a little bit of a different scenario. Mr. Rhoads, you've had some time to mull over this new vol of vol regime we find ourselves in now. What are your thoughts on this VVIX being below 100 and actually hanging out there for a while now, sir?
It finally broke that 100 level over the past couple of weeks as we as we finally got into a consistent contango. And you have to keep in mind, if you're looking a few weeks out and thinking about buying VIX calls, which buying VIX calls is what drives BVIX. If you're looking at that and you suddenly see the July or the August futures at a normal or even greater premium than we're used to seeing over the past few months, you're less willing to step up and buy calls. If you're less willing to step up and buy calls, that's going to result in BVIX coming down. So I don't know if it's necessarily an indication that all the vol traders think that we're out of the woods, as much as it's a function of the futures relationship to spot VIX right now.
So we had that poll last week, our question of the week, and overwhelmingly, like 75% of our audience chose that this current vol regime was just the calm before the storm. It wasn't the start of a new lower vol regime. Where would you vote on that poll, sir?
I don't think it's the start of a new lower vol regime. Plus, the 20s is not a low vol regime.
No, it is not, but that would maybe signal the beginning of creeping back down to
between 20 and 25 for the rest of the year. That's not a low volatility regime.
That is not.
That's kind of a boring one, but
it's fun trading in products like UVIX and stuff. But outside of that, yes, it is not boring. That's for sure. An interesting one. Let's go out to the rest of the vol table setting. We got kind of sidetracked on VVIX. Understandably so, though. It's an important level. A vol Q, so the at-the-money vol of the NASDAQ listeners, 31 3/4, down about 2.5 points from where it was this time last week. That puts that VIX to RVX, so the large cap to small cap vol spread, about 5.6. That's a little bit wider. It's about 1.25 points wider than it was this time last week. And the VIX to vol Q at about almost 7.2 points. That's over 2.5, about 2.6 points wider than it was this time last week. Mr. Rhoads, I know you watch a lot of different vol metrics in the equity space. You pay a lot of attention to the ratios, VIX to small cap, VIX to NASDAQ, and what are your thoughts on the levels we're hanging out at right now?
I do. I pay an awful lot of attention to them, and I feel like if you had paid a lot of attention to, and Monday morning quarterbacking is so easy, but if you'd been paying attention to those relative to VIX in January of this year, you would have gotten a nice indication that tech and small cap is not exactly where you want it to be. I really would love to see, before diving back in fully on tech stocks, that vol Q to VIX ratio, or just the absolute spread, narrow an awful lot. It's not just a tech implied vol, it's an at-the-money implied vol. And if the at-the-money implied vol comes in relative to the out-of-the-money implied vol, I think that starts to give us an indication that things are a little bit more rosy for tech stocks. But I want to see that right now, as you mentioned, it's like a 7-point spread. In a normal environment about this time of year, it should be more like a 2 to 3 point spread.
And trading that spread will become a lot easier soon, listeners. We had Scott Nations on our Pro Q&A, of course, the creator of VolQ. You've had the futures now at CME. They're going to be listing the options soon. So that'll make trading, let's say, a NASDAQ to S&P vol spread a lot easier to do than just a lot of you, I know, are still a little bit reticent about diving straight into the VolQ future. So those options coming soon will make it a little bit easier for you. Let's see if things are easier out here in small cap land. And the answer is, yeah, they are lower. By the way, it seems like the broad market, as we've been talking, Mr. Rhoads, selling off a bit, down off over 1.5% now in the S&P. NASDAQ closing in on about 2%. So, yeah, it was looking kind of sell-off-y. Then it seemed like we might be rallying, maybe even get into the green, and then right back down here into the red. So S&P flirting with that 4,000 level. Not quite there, still 40-50, but looking rough again out there. Small cap, same deal, 1863 coming into the start of this segment. Puts them down about 17 handles, or about almost a full percent on the week, and obviously off more if we go back to where they were this time last week. Kind of a light paper week out here for the small caps out here, so not doing as much paper as we normally see, maybe because a lot of the equities usually tend to focus on very near-term stuff. And we're seeing some of that out here this week with stuff going away in about the contract that has 8 days to go, doing 32% of the paper. That's actually long-term for an equity, because we see, about 28% going away in a day. And those are the 19 half calls, if you're wondering. We're at an 1863.70 right now. In small caps, 19 half calls going up nearly 500 times this week. So a lot of near-dated, now very small delta calls. Those are all going out tomorrow. Also saw a lot of action on the 1700 puts. So 163 handle out of the money puts as well. That's kind of what we tend to see a lot of in rut these days, are small delta calls, which a lot of you folks tend to ask about. And also some out of the money puts. That's kind of where the two kind of trends that we see lining up here a lot. And that 1700 puts, we have those going up in June, mid-June, and then we have those are going away in about 8 days as well. We also have some folks slinging the 2000s here in the end of June contract, has 21 days to go. Interesting. And then we also got 1720 and 1705 puts, if 1700 wasn't a strike that caught your fancy out here. So a lot of interesting paper going up here. By the way, what is the vol in the June contract? That has about 8 days to go. So take some of that vol with a bit of a grain of salt. Almost a 31, about 30 3/4, up about 2.25 points. So not that far removed from what we're seeing out there on the RVX metric as well. Skew wise, last week, the puts 5.3% bid. This week, 8.7%. So the puts catching a bit of a bid. The calls 5.5% rich. This week, 8.5. So actually, if 8.5% cheap, that'd be interesting if the calls were rich. 8.5% cheap. That would throw all the things we know about equities out of whack. And again, the hot contract, 1700 puts and 19 half calls this week. Mr. Rhoads, anything catching your eye in the world of small caps or any other equities this week, sir?
Well, it's kind of interesting to see some of the call implied volatility higher than the put implied volatility. I don't know if that's because it's some of those weekly expirations that don't have a whole lot of volume behind them, but maybe some folks are setting up for the FOMO small cap trade where they don't want to miss out when we finally do get the rebound.
There we go. Small cap squeezing is coming back, baby. It's small cap squeezing season. All right, we got time for one more complex before we bring the folks on to join us, sir. So where should we hang our hats next, Mr. Rhoads?
Oh, metals were getting beat up pretty bad, huh?
Metals were rocking and rolling, so let's head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Go to the drop down, listeners. Pop out of equity indexes. Go all the way down to the bottom of the asset class list. That's where you find metals. Now, normally we'd hang out in the top of that product family with the precious stuff. Talk the gold, the silver. Going to mix things up a little bit today because if you heard our rundown earlier, our movers and shakers, copper lighting it up again on our dark side. We also had platinum and palladium, which would fall in some other categories, but we're going to go base today. Going to go to base metals, and in particular, copper, because like I said, it's doing a little bit more paper these days. It's starting to actually rival silver. Silver, 17,000 contracts some weeks. Copper right now, 14,242 contracts on the tape for copper. So interesting stuff afoot. Mr. Rhoads, do you pay a lot of attention to copper? Because it has been a growing options story. When we first started this show, it was probably doing maybe barely a couple of thousand contracts. And now it's starting to have a life of its own, sir.
Yeah, I most definitely. I've always paid attention to copper going back to, being an equity analyst, because it really is a good indication with respect to potential inflation and maybe potential deflation, which is what we're all hoping for now. But I haven't paid attention to the option component very much, but the absolute copper price. And then, the Phelps Dodge, and I feel like there's another one, maybe I can think of the stock ticker, but not the company, FCX. There were a couple of, copper-related stocks that I would trade periodically, and they were highly correlated to the price of copper. So I've always paid attention to the futures, not nearly as much the options.
Freeport McMoran, sir.
Okay, that's I couldn't. Age.
All the technology. It's driving you crazy there. So let's go out to the land of copper, see what's lighting up. Like we said, a pretty active week, 14,242 contracts. So again, it's no euro dollars, but compared to the history of copper, that's blowing the doors off out there. Where is copper right now? For those of you who don't follow it, $4.36. It's off about 10 cents or about 2.3% since Monday's session. Of course, if we go back to last week's show, it's off almost 3.5%. In terms of vol, things are decently frothy. It looks right around a 31 for that front contract that's going away in about a day. We won't hang out there. Instead of this 14,000 contracts, almost 50%, 47% went up in the AUG contract that has 77 days to go. So that's refreshing. We're going to hang our hat out there instead. The vol out there, listeners, a 2760. So actually ticking up a little bit this week. The rest of the term structure, the vol is coming in, except for this AUG contract out here. And in terms of the vol, I said 2760, up about a third. And the skew out here, by the way, I say AUG, I meant September. September contract. The skew out here, 1.2% rich were the puts last week. And we're pretty much in line with the at the money now. They're kind of unched this week. Last week, the calls 0.9% bid. This week, 3.1% bid. So the calls getting a little bit of a bid. The puts coming in line with the at the money. That's kind of interesting given the price action we've been seeing out here. In terms of that price action, the leading contract this week with nearly 3,000 contracts. That's a lot of paper for copper. The 475 calls here in this SEP contract here. Wow. They did 2,801 contracts, all of that opening. Looks like a vertical, actually. The 475 5.25 vertical went up 2,799 times on Tuesday. Man, that's a lot of paper. 5,600 contracts. That's a ton of paper in one spread for copper. Wow. 475, 5.25. You follow copper? What do you think about that spread, listeners? That's an interesting level. Not perhaps quite as aggressive as what we saw with that upside vertical in crude oil, but still an interesting one nonetheless. Mr. Rhoads, if you want to give us your thoughts on copper, I'll try to dive into the blocks report really quickly and see what they did with that spread, sir.
Sure. I mean, it's definitely a metal that you expect to rise with inflation expectations. And when you take a look at, the futures curve, actually the futures curve's pretty flat. You go out to the end of the year and it's, about a penny higher. So I'm going to apply, I've brought up VIX twice now. I'm going to apply the same sort of thinking that I incorporate when I take a look at the VIX curve and when we have some funny kinks in them, with the exception of December. Whenever the VIX curve is extremely flat, I often attribute that to an awful lot of uncertainty. And I think with confidence, I could say that there is a whole lot of uncertainty with respect to the price of copper. And I could probably make a top 10 list of things that could impact the price of copper over the course of this year. And half of them be positive and half of them be negative. But just looking at that term structure, which only has a 2-cent difference or a 1.9 cent difference between the front month and going out to December of this year, I think that the copper traders are not, there's uncertainty, lots of uncertainty.
I'm looking here. It looks like they bought that spread and they did it tied to futures. So they bought the calls for 0.133. They sold the 5.25 calls for almost 5 cents, 0.048. And they did it tied to futures at a 442 level. So that's interesting, buying that vertical and then selling the futures against it. Interesting stuff. So there you go, listeners. A little bit of insight into some tied blocks going up here early this week in copper. That's a size trade for copper. That's enormous.
Yeah.
So that one's going to be on for a while. You're not going to get out of that one pretty easy. So interesting that they did it tied to futures. That kind of adds an interesting new wrinkle to it. You know what else always adds a new wrinkle to the show? It's your feedback. So let's get to it.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment. Let's go out to the live chat. Nichols wants to know, how do I access that block trade tool? Well, as I mentioned, there's a premium version of the quick strike tools. Those are available over there at Bantix, BANTIX.com. As I've said, we only scratched the surface on what's available. And the folks over there make that TWIFO report, This Week in Futures Options report, available for free for all of you folks, which is very nice. You get access to a lot of great analytics there, but there's obviously a lot more going on behind the scenes. So if you have access to the pro tools, and again, I definitely wholeheartedly encourage you to do so over there at Bantix, BANTIX.com. You can access more things, including, if you see that drop down there, listeners, you'll see more tools. Go into that, go into the block trades. And the nice thing about it is that it will pull up whatever product you're currently looking at in This Week in Futures Options. Like for this example, I still have copper up. So I pulled up the block trade tools and it obviously goes right to copper, which is nice. And it has today's activity. You could change the day. You could filter by if you just want the futures or the options only or both. You can filter by all that kind of stuff. And so in this case, I filtered I just changed the day, put it back to Tuesday, and I could see instantly where that spread went up and also prices they did it for, and also where they did it tied to futures. So it's a very useful tool if you want. People are always asking us, hey, did they buy these? Did they sell these? This is the kind of tool that gives you that level of granularity. It's a couple of clicks in. You got to dig for it sometimes, but it's worth it if you really want to see what people are putting up. For example, the fact that that was tied to futures makes it an interesting trade in and of itself. So yeah, I hardly recommend, if you're not using them, get on out there to the pro tools, because there's a lot of great data. It's only an hour show. We don't only have time to scratch the surface here on the show. Mr. Rhoads, you come from an exchange background. You spent a lot of time working, including our crosstown friends there, the SIBO, who launched a new open outcry trading floor this week, which inspired our question of the week. Our question of the week this week is, does open outcry still have a place in the modern options market, or is it an outdated relic of the past? Gave you three choices. Yes, it's still important. No, electronic or bust, or what the heck's open outcry? Mr. Rhoads, I have a feeling I know how you might vote. If you want to share that, have at it. And then B, more importantly, what do you think our audience is voting for?
No, I think it's still important. And I was honored to get to do the first Volatility 411 video from that floor. And that because we taped it in advance, there was just going to be too much going on the first trading day. I talked about why we still have open outcry in trading and how it is important, especially during times where it's more difficult to secure liquidity. And 2022 has been a year like that. So if you're big institutions, if they're looking to put up something really large and they want to negotiate it, one alternative is to call a big investment bank and enter into an over-the-counter trade. Their other alternative to seek out big pieces of liquidity all at once is to go to one of those pits. And the CME group, they still have option. They've got pits for a bunch of these most actively traded option markets that we talk about. And if we started going through those block trades, I'll almost guarantee some of those were negotiated before they got down to the floor.
Yeah, there still very much is room for what they call the high touch out there, especially in the large, complicated. If you're going out and buying your 10 lot of your AMC calls, you can get that done electronically pretty easily. But for a lot of these larger, more complex, look, we talk about Eurodollars on this show. That one needs a lot of high touch elements. SPX, or certainly at SIBO, VIX, a lot of these big institutionally oriented products still have a lot of large, complex trades that need a little bit of the old high touch execution. So from that percentage, I definitely believe that there still is, and sure, maybe some of the old market maker in me comes out in that as well. But I still think there is still a home for open outcry. I definitely vote for that. Our audience agrees, Mr. Rhoads. 43.5% saying yes, it's still important. 34.8% saying no, electronic or bust. And the meme kids, 21.7% saying, what's open outcry, Mr. Rhoads? So all sorts of fun. That's going to be live until tomorrow, listeners. If you haven't voted, get over there at options to make your voice heard. Let's go back out to, this is Jim. That's right. He wrote in last week about the skew question and looking for the calendars. This is Jim Ayer. He says, Gene and Mark, good love for our producer, Gene. Thanks for answering my question on last week's show. It was very helpful. I don't think I was clear with my question, so I was wondering if you could help me answer the other part of my question. Example, if someone sells to open a 15 delta call or put because they think the futures are going down or up and they are trying to collect premium from the trade, does that make the cost of the option go up because they are actually borrowing options from the brokerage firm and the brokerage firm has to buy the options to let you borrow them? Sometime when I'm listening to the show, I think you are saying someone is selling to open the 5, 10, or 15 delta calls or puts to collect the premium. I think you were saying there's a lot of volume, and that is why, for example, the put wing went up compared to the previous week. I think this approach works for a while until it doesn't, and then you get hit by a steamroller when the future drops quickly. Thanks, Jim. By the way, you pronounced my last name correctly. That only happens about 10% of the time. Well, thank you. A lifetime of at least a decade or so plus of pronouncing names will help me get there. I don't get there all the time, Jim, but I try. I endeavor to get the last names correct. But yeah, when we're talking about the skew stuff on the show here, what we're predominantly talking about, we were talking about with Russell earlier in the show today, the quick strike, it measures the 25 delta call and the 25 delta put. That's the primary way people still measure skew, Jim and everybody else out there. They're going to look at what is the vol level for the 25 delta call, what is the vol level for the 25 delta put, and they're going to compare them to the at the money and to each other. And that's where we get are quick skew numbers. So when we're talking about quick skew, first off, that's what we're always talking about. Not 5 or 10 or 15, 25 delta calls and 25 delta puts. And as we were saying earlier in the show, when the customers are coming in and let's say selling to open a bunch of those aforementioned 25 delta calls, that's going to crush the volatility because they are opening a lot of selling premium positions. Don't get lost in your head about selling and then borrowing the options from your broker. It's very simple. If a customer is coming in, let's say that a large block to sell and whatever, pick your poison. Let's say copper because it's a liquid name. It's easier to see there. Someone comes in and crushes the bid on 25 delta calls in December options in copper. You're going to see that call wing get annihilated as a result. So it's looking at what is the customer paper up to. That's what's going to dictate what happens in the skew. If they're buying to open puts in that 25 delta range or somewhere thereabouts, that's going to elevate the level of volatility in the put wing as a result. Whatever the customers are doing, that's going to dictate the skew of your product. Mr. Rhoads, anything to add here for Jim, who's a little bit confused about what happens to the skew, whether you're buying or selling options, and also about borrowing options from the brokerage firm, sir?
Okay. Well, I think what Jim might be talking about is something that's in the pure equity world is when you sell short a stock, you borrow it from the brokerage firm, and they don't go buy it. They don't go buy that stock and then lend it to you. What they do is they take it from one of their customers who is allowing them to lend out their shares, and the customers are getting paid a little bit for lending their shares out. That's not how it works in the derivative world. An option doesn't exist until a buyer who is opening a position and a seller who is opening a position come together. So if paper is selling and the brokerage firm or a market maker is buying, the market maker is going to want to they're going to want to buy a little bit below fair value, which means they're going to buy closer to the bid than the ask. Well, if a trade happens closer to the bid than the ask, that's a lower price. All else being the same, that's lower implied volatility.
Yeah, don't get hung up on, I could see the analogy, of course, of looking at stock and borrowing stock from your brokerage. You might think that would apply to options. As Mr. Rhoads says, options don't really work that way. There's always a buyer to your seller and a seller to your buyer. Chances are it's a market maker, a liquidity provider who gets paid to stand in there and do that. That's what I used to do back in the day. A lot of our hosts and guests on the network used to be market makers as well. So there's always someone else taking the other side. Doesn't mean the market maker wants to buy that. That's just his job. He's standing in there. He's making that bid. If you hit it, he has to buy those. So there always is someone else out there. So yeah, your broker isn't going out and sourcing a place to borrow the shares, or in this case, the options from. This network, we want people to be discovering options from all walks of life and all levels of experience. And if you're coming to it from the stock world, I could see why you would think about that. Jim, I would encourage you, if this stuff is still a little bit confusing to you, we have great programs on the network. Options Bootcamp and Options Playbook Radio in particular are two great starting places for a lot of great educational content. Both of them have hundreds of episodes now that you can go and enjoy at your leisure. In fact, a lot of people have been doing just that. Options Bootcamp episode 1, which came out almost a decade ago now, was our number 1 episode on the network last year. People were going back and mainlining educational content starting at episode 1. So if this stuff is still a little bit confusing to you, I highly encourage you to check out Options Bootcamp or Options Playbook Radio. All right, Mr. Rhoads, we did it. We made it through another one in spite of your technology conspiring against us again, sir.
Gee, Willikers, I don't know what's going on with that. I think I'm throwing this computer out. That's it. That's all. It's had it.
Third time's the charm, sir. Like, when it fails you the third time, it's got to go.
I don't know what's going on. Actually, we'll talk about it off air, but I think I figured out that there's a conflict between our chat and when I'm looking at the TWIFO documents. So
that could be it.
That's my best guess. Who knows?
Well, Mr. Rhoads.
So I know we're running out of time. I am getting ready to take a couple of weeks off. Doesn't mean I'll be totally out of sync, but my youngest and I are going to go driving around with some storm chasers from one of those reality TV shows. We're going to spend a week with them going and finding tornadoes.
Really?
And yeah.
What inspired that? Is your kid into meteorology?
She wants to be a meteorologist, and I've even talked to her about how that relates to our business a little bit because of the growing season, etc.
Yeah. Interesting.
But yeah, she wants to, and she doesn't want to be an on-air one. She wants to be a scientist.
She wants to be in the trenches. She doesn't want to be just pointing at the map. She wants to actually be crunching the numbers. Okay.
Exactly.
I can respect that. So you decided, you know what? I don't want to see a tornado. I don't want to see a tornado on TV. I want to be up close and personal with an F5. That's what you said.
Hell yeah. And I got all kinds of cameras and everything else. I will, if something good happens, we'll share it on, I'll definitely share it on Twitter.
Well, I hope we will see you again on the network in a couple of weeks.
If not, it's been great.
If not, we have enjoyed our time with the once and future Dr. Vix, and now past tense, Dr. Vix. Before you go storm chasing, if folks want to check out some of your articles and stuff, where should they go? What should they do?
Every weekend, every Saturday, I put something up about the equity and the global equity markets now, and continue to start to cover more and more markets. It's just at eqderivatives.com. Typically, the top article starting on Saturday mornings is open access. A lot of our stuff is behind the paywall, but not the Saturday reviews.
There you go. Check him out. You can also find him on the old Twitters at Russell Rhoads, all one word, Rhoads is the place to go to learn more. You know where to go to learn more about all of these tools we were talking about today. You can get started, cmegroup.com/TWIFO, TWIFO. That gives you access to the base This Week in Futures options tool. You can see all these things we're talking about in a lot more detail. Then if you decide you want to upgrade, go for some of the block trading tools, all the other cool stuff that we don't really have time to scratch the surface of on a show like this. Then you head on over to Bantix, BANTIX.com to begin your journey to the dark side. And of course, you know where to go to learn more about all things small caps, Recon. It's that time, listeners. So you want to know about Recon. You want to know about what's going on with the COVID Impact Center. They have that going on over there. Small cap versus large cap volatility, correlation, and a whole bunch more. FTSERussell.com, FTSERussell.com is the place to go. While you're there, give them a follow on Twitter. A lot of great data coming out throughout the week. FTSE Russell, all one word. We got to get on out of here. That's going to conclude our broadcast day for today, listeners. But don't worry, coming back at you tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. Is there some vol to view this week? Yeah, it's a bit of a weird one. We'll get into all that fun stuff on the show tomorrow. Coming back at you on the pro side after that with Options Oddities, breaking down the week's worth of weird, wild, and just crazy options paper. We're going to do that on Options Oddities. And we're back again next Monday to kick off our broadcast week with the option block all the way through to another Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.